Hey folks, what's going on? This is Shadow Stars. Sorry I haven't been really making videos. Honestly, I've kind of lost interest in covering some of these meme stocks. But I see that a lot of people have been getting interested once again in AMC. So and they recently had earnings. So you know what? Let's take some time. Let's go over the earnings, and I'll give you some of my thoughts of what's going on. What my thoughts are about the AMC now as a company. Has it changed in the last, whatever, 6+ months? So, what I'm going to do is I'm going to be diving into their earnings release. And for that, I'm going to be using the SEC Edgar website. So, this is all public information. You can pull it all up from the SEC website, the Edgar website. This is not some sort of photoshopped or randomly built website intended to trick anyone. This is, you can use that link or search up SEC Edgar, put in AMC, and you'll pull up the exact same stuff that I have. Same thing, or you can go onto Google, type in AMC, go to their investor relations portion of their website, pull up their earnings report, their press release, and so forth. For me, I like going through the SEC website. It's all official filings. Kind of sometimes you can get rid of a lot of the fluff, or some of the real big biases sometimes that you might see that a company might try to present in their press release. So for me, right off the bat, I want to look at how's the company doing? Is it making money or is it losing money? So for me, what I look at right here, net loss. What is it a net loss or is it a net gain? AMC, net loss. So they're what? Losing money. How much money did they lose in this quarter? In Q2 2022, ending in June 30th, $121.6 million. So, once again, AMC did not make money this past quarter. They lost money. So let's look at previous year, same quarter, Q2 2021. How did they do? Once again, net loss, minus $344 million. Past 6 months of 2022, how have they been doing? Net loss, $459 million. Q1, Q2 combined, so 6 months ended, 2021. How much did they lose? $911 million. So AMC has been losing money quarter over quarter. But we can see that the amount of money that they're losing per quarter is going down. That's what it looks like. What we can also do is that we can pull up their previous quarter, so Q1. So let's look at Q1. What did they do? Minus $337.4 million. We can kind of extrapolate that from the fact that they lost 400. So we can pull up a calculator here. 459 million over the last 6 months. They lost 121.6 million and 337 million approximately. So does that match up? Yep, it does. Numbers don't really lie here. So last 6 months they've lost $459 million. That's a pretty big loss for a company. Let's keep that in mind. So what's going on? So let's take a look at the revenue. $1.16 billion in total revenue. You got admissions, food, beverage, other. The 3 category breakdowns. So it looks like, obviously, admissions is more than 50% of their total revenue. You got food and beverage. It's their second largest category. That's what? 1/3 of their total revenue. I guess other things to consider. profit margins in regards to admissions, profit margins in regards to food and beverage. Food and beverage margins probably are significantly higher because I don't think you need to be a rocket scientist or some genius physician or some statistician or just common sense. Look at how much is a bag of popcorn, how much does it cost. Same thing for a soda. If you were to buy a soda at your local grocery store, local wholesale grocery, so like a Costco, Sam's, whatever, or just regular grocery store, Walmart, etc., how much does it cost to get that soda versus, let's say, a soda or candy at your local AMC? There's an upcharge. So margins are definitely greater. So they're going to be making more money on that food and beverage. Nonetheless, it's a smaller percentage of their total revenue. But nonetheless, admissions, those ticket sales, AMC needs to pay money to the producers or the movie studios. So nonetheless, their revenue was 1.16 billion, while their operating costs and expenses is 1.18 billion. So their operating loss is $16.1 million. They're in the red. They're losing money operating. You can look at previous year, same thing. Last 6 months, same thing. It's all in the red. So AMC is still not turning a profit. Let's go further down into their balance sheets. How are they doing on money? How much cash do they have? Well, ending this quarter, $965 million in cash and cash equivalents, compared to how they ended in 2021, 1.59, almost $1.6 billion in cash. So yeah, they're burning through this cash pretty quick. Another thing to consider, total assets, $9.8 billion versus $10.8 billion. Lost assets of nearly $1 billion in the last 6 months. That's pretty concerning. But let's look at a couple more things to consider. What about their liabilities? Maybe if their liabilities drastically went down in according to how much assets that they lost, maybe that makes sense. Well, $12.1 billion in total liabilities versus $12.6 billion. So $500 million in liabilities has gone down, but their total asset has gone down by $1 billion. So you're losing more in your assets than the total liabilities that you have. Once again, the bigger the bigger picture to take a look at is liabilities versus assets. What do you have more of? Do you have more assets, more things of value that you own versus more debt? Well, in the case of AMC, no, you have more debt, more liabilities than your assets. How much corporate borrowing do they have? $5.3 billion. That's a big concern. They still have all this debt. How much has their debt changed going forward? From December closing 2021, 5.4 billion, and now they only have 5.35 billion. It's only gone down 50 million. Okay. But I'll give it to you. There's a point that, hey, companies don't operate with absolutely zero debt. Definitely true. Companies will have debt. The important aspect of it is, how can they service that debt? Are they able to pay down their debt? And how do they pay down their debt? Is it because they have net positive cash flow? Or is it because they're just diluting their stock, raising money, and buying time? Well, so far in the case of AMC, They have a net loss. They've been having a net loss. They've been losing money hand over fist. So the way that they're servicing their debt and their debt payments is they've raised a whole bunch of money, diluted the stock, and they're just burning through that. So the question becomes, at what point will AMC finally become profitable? At what point will they have operating gains instead of operating losses? I don't know. But there are factors I think we should consider that could help us understand when that could occur. So, AMC is a movie theater. To make more money, to make more revenue, what needs to happen? Need more admissions, right? Need to sell more movie tickets. Food and beverage. Probably need to sell more popcorns, more sodas, more candies, etc. So how does that happen? To sell more tickets, you need more people going to AMC. You need more people going to watch, or if it's the same number of people, you need the same number of people buying more tickets, watching more movies in general. You need more people spending at the concession stands. You need to increase your revenue. That's one way. Or, if you maintain revenues at current levels, you need to reduce your costs. So, looking at your item lines of, hey, can you negotiate your film exhibition costs, your food and beverage costs, your operating expenses, your rent? Can you cut down those costs even more? Or it could be a mix of both. Maybe you cut costs and at the same time increase your revenue. Because in the end, in the quarter, you were still down $121 million. So, another thing to consider here is, what I like to look at is attendance. AMC, they usually put a nice little table for us to look at attendance. So here, they have their operating data and attendance in thousands. So what, 59,129, it's in the thousands, so that's 59 million tickets, I would assume, as opposed to people. That's my assumption. Why? Because how do you know how many people exactly came to the theater? What if one person watched more than one movie? Are you tracking that? I don't think so. So I'm thinking this is loosely based, I could be completely wrong, but on just tickets. So it's 59 million tickets sold. Maybe I'm wrong. That's just a random take for me, but nonetheless, your attendance figures, how are they doing? Coming out of the pandemic versus previous year, obviously much better. But compared to pre-pandemic, how are they doing? So what I did was I pulled up their previous filings, 10Qs, 10Ks, and I did a couple comparisons. So pay attention to this here, row 31, attendance. This is 2018, Q1, Q1, Q2, Q3, Q4, and then the full 2018 year. What trend do you see in their attendance? Q1, 90.9. Q2, 91.2. Q3, 80.6. Q4, 94.06. Q2, Q4, let's highlight them. Best quarter was Q4. Second best was Q2. Q1 was their third best. Q3 was their worst quarter. Out of the 4 quarters, if you just rank them, attendance-wise, Q4 had the highest attendance. Q2 second highest, third highest, fourth highest. Keep that in mind, 2018, 2019. Q1 79.8, Q2 96.9, Q3 87.1, Q4 92.5. So what? Q2, Q4, what? Highest attendance. Q1, Q3, lower attendance. And if you actually look at the movie industry and how the successful blockbusters, the general trend has always been Q2, Q4, big releases hit. That's when when movie theaters do the best, the most attendance, the best movies, the biggest hits. They make the most profits during those quarters usually, the most revenue. So, what quarter have we been looking at right now? We've been looking at Q2 of 2022. So, based on previous trends, Q2 is probably their best or second best quarter. We have 2 quarters left in the year, but nonetheless, Q2 was one of their best quarters, or should be the first best or the second best quarter out of the year, if it follows a normal trend. So, their quarter 2 figure should be first or second best of the year, right? If the trend follows. Well, so far, worst case scenario, let's say it was the best quarter of the year. Well, that means that this net loss, we would logically assume that if this was the best quarter of the year, then Q3 is going to be less than Q2, so they're going to have a greater net loss. Okay, let's look at the flip side then. Let's say Q2 is going to be instead the second best. Nonetheless, Q2 is still going to be better than Q1 or Q3. So, you could expect this net loss to still be greater for Q3. But maybe you have an awesome Q4. Don't know. Or, let's throw all of that out and let's put in the assumption that, hey, you know what? We're still not fully recovered out of the pandemic. So, you know what? The best is we still got our best quarters to come. So Q3, Q4 are still going to be even better. That could be possible. But what sort of factors do we need? We need more ticket sales, more food and beverage sales, maybe cutting costs. You need a mix or a combination of all of them to occur. Looking at movie releases for the second half of the year, I don't know if there's that many blockbusters, at least in quarter 3, that'll beat quarter 2. Maverick, the Top Gun movie, excellent. You see tons of press releases, news about how it was a great movie, one of the best grossing, etc. Okay, that was great. So you had one of the best quarters so far coming out of the pandemic. Are you going to have more of those consistently now for Q3 and Q4? If not, then I think it's normal to expect that, hey, you're going to have a net loss. You're going to be burning more of this $965 million in cash that you have. You're a company that's not profitable. You're burning money quarter after quarter. You're running out of money to use. And you still have tons of debt that you need to pay off. Debt, mind you, payments where, hey, okay, you don't have to make much payments this year, but the following year, 2023, you got $525 million coming up. Can you refinance that? Can you push that back again, restructure it, etc.? Maybe. How much of that can you do? What's that going to cost? when you push it back, are you going to be paying the same interest rates on it? What are the terms of it? I don't know. That requires more digging in, but nonetheless, it's food for thought. You have a company that has a mountain of debt, five billion plus dollars in debt, but you still are not making money quarter over quarter. You have no positive cash flow. You've been getting by because you diluted the stock greatly and you've been burning that cash quarter after quarter. When you run out of that, what happens? If you're not able to raise money, if you're not able to turn a profit, you have net cash flow, you have no way to service your debt, no way to pay your debt, and what happens? You'll have to go bankrupt. So that's just straightly from just the earnings numbers. Doesn't look good. You're still losing money quarter after quarter. The cash on hand you have is decreasing. You're running out of time on the debt. Where'd it go? Sorry, where'd you go? There you go. You're running out of time on how much debt, the debt payments. You're running out of time as to how much you can push it off. Furthermore, we got to consider macroeconomics. The world that we live in, how's the economy doing? Are we in an economy, are we in a world economy where people are going to be more likely to spend money in a movie theater right now? I don't know. I can't predict the future, but my bias is that, hey, all across the world, all the big countries, all the major nations, G7, G8 countries, we have inflation that is out of control. The US, we have crazy inflation. Interest rates are rising. Cost of living is going up. So what happens? My logical thought is that, hey, as people are spending more money just on the same basic essentials, whether that's rent, how their rent, their lease, spending more on gasoline for their cars to go to work, spending more money on food, unless their wages are increasing at that same rate or greater, they have less expendable income. Less expendable income means they're probably less likely to spend it on certain types of leisurely activities or goods, luxury goods. So people need to budget more. People need to prioritize. How is that going to impact AMC as a movie theater? Are people more likely to spend money going to the movie theater? Are they going to be not affected the same? Or are they going to be impacted and people are going to go less to the movie theaters? I personally think that if the economy goes into a downturn, we go into a recession, which I think we technically are, then people are less likely to go to a movie theater. Are you willing to go to a movie theater, spend $10 to $15 a ticket, spend all this extra money on soda, popcorn, candy, and other foods? Are you willing to spend that $20 to $30 per person cost to go watch a movie? Another 20 to 30 if you have another person you're watching it with. Maybe another 10, 15 if you have kids. Are you willing to spend that money? Does it make sense? I don't know. I think that there's increased pressure now on movie studios. Are they going to be putting out movies that will attract more people to come to the theaters? Or less? And what about the competitors? Is streaming going down? Streaming going the same? Streaming going up? Need to factor in that too. All things. Let's say we assume everything remains the same. If everything remains the same, AMC continues to go exactly how it did. Their Q2 performance is replicated in Q3. Still a bad scenario, because you know what? You are not profitable in Q2, then if it's the exact same, you're not profitable in Q3. You're burning another $121 million. So what? $140 something million in cash? Running out of time. Because you got all this debt, corporate borrowings, $5 billion that you need to pay. You got that $500 million coming up next year. You burn. I know this figure is not totally right, because unless the second half of AMC's performance, so Q3, Q4, unless that's the exact same. If it is, then another $459 million burned. $459 million from 965. Well, guess what? Ending 2022 and going into quarter or 2023 Q1, how much money you got left? 965.2 minus what? 459, right? Yeah, $506 million left in cash and cash equivalents. You have more than 500 and was it 30? $525.6 million due 2023. So you need to be either turn around your business model so that you bring in money, restructure that somehow, push it back, or you raise money so that you can pay that off. Something needs to happen. So this is just going to be part one. This is just the basic look at AMC's earnings. And my initial thought is that, hey, yes, the situation is improving, but that doesn't mean the situation is good. You still have a lot of debt. You're still not profitable. That doesn't mean it won't be profitable, but my point is that you have obstacles that you need to overcome. Will you be able to overcome those obstacles fighting potentially overall negative macro sentiment outlooks, possible recession, and movie releases? Are these announced movie releases for the second half of the year, are they going to be good enough to bring in that money? I don't know. But as I mentioned, this is just part one of the earnings thoughts and really analysis that I'm giving out for today. The next half, part two, I'm going to be going through the whole share dividend announcement that AMC gave, the CEO gave, of what this AMC Preferred Equity Unit, this AP unit. I'm going to be going over my thoughts, my understanding and analysis of it, and potentially what I would think, what the impact of this is. And probably a part 3 is going to be needed. Already part 1's super long, part 2 is probably going to be super long too. Part 3 will be combining parts 1, part 2 into one, so that, because these I think are linked, they can be, they're definitely correlated. I think that you need to understand not only the earnings aspect and financial aspects of it, and then the whole dividend situation aspect of it, and combine those two to get a better understanding of what exactly this equity, this dividend is going to do. And once again, this is just my thoughts. I'm not a financial advisor. I'm not telling you what to do. I'm just telling you, I'm just talking, I'm just sharing a video of what my thoughts are, what I understand, and what I know. It's up to you to do what you want with it. So let me end that video here. Thank you, folks, for those that stuck to the very end, listening to everything. If you have any questions, feel free to put them down below in the comment section. And I'll have the next part of the video up, my analysis probably of this dividend, up tomorrow. Until then, folks, peace.